Alright, hi, this is Dylan. Welcome to my trading analysis video. So today is a Thursday. So let us just first look at a few currency pairs over here. Alright, let's start off with the dollar against the yen. So previously, this is the forward chart. So previously there was a range over here, as you can see, the blue box over here. Maybe I just plot some resistance and support level. This was the one. This area, zooming into the 1 hour charts will be more clear in a way. Okay, so price has actually broken above it and it came down again. I believe that it's because of a economic slowdown in the US economy that causes the price to drop. So next level we're gonna look at is the price of 108.39. That's the first support level that we're gonna look at before we look for a long opportunity. All right. And back to the forward chart, we can see the price has broken below the 55 moving averages. So that does signals for a probable chance for price to fall even further. But anyways, let us just wait for price to reach the support level of 108.39. Moving on, next will be the euro against the dollar. Similar thing. The US dollar has been slightly weakening a little bit, so we can see certain retracement being made here. Right, this is the forward chart. Zooming into the 1 hour chart, previously there was a consolidation over here. Alright, this is the resistance level, and then you can see that there's a consolidation over here forming an ascending triangle. So now it seems the price is about to break above. So, but well, if it is being registered over here again at the price of 1.2635, and if there is a reversal, then it might pose a chance for a short opportunity. So when the price came down and touches the rising trend line, then we might wanna take the profit, or to shift the stop loss to your entry point. Alright, so that's for the euro against the US dollar. Taking a look at the Aussie itself, price has finally reached the previous low at 0.86646. Alright, this is the one I'm talking about. If I zoom out to the weekly charts, you'll get what I mean. Alright, the previous low back in January 2014, so price has touches the level and it started to rebound. But then again, on the fundamental level, we knew that the Aussie is weakening against the US dollar. So right now is a good chance for us to wait for the price to retrace further to a level for us to go for a short again. You might want to just pull out the Fibonacci level. Well, you can use the moving averages, the 200 moving averages, the 55 moving averages as a gauge for a level to short. Or if not, we can actually take a look at some of these resistance level, probably over here, the previous stack line that we've seen over here, the price of 0.9, or probably the sentiment price of 0.9000. That might be the level, but the first level we might want to look at is 0.8887. So wait for the price to reach that level and we decide whether to short again. Next move on will be the New Zealand against the yen. Right, the Kiwi against the yen, previously, as I had mentioned, is that the price has broken below the range of 89.65 to 85.76. So zooming into the forward charts, when it breaks below, it came up, got resisted at the bottom of the range. It fell and suddenly it just reversed again, forming a double bottom. Right, so this is the double bottom, as you can see. So this area over here will be the neckline. Alright, this might become the neckline. So if it breaks above the neckline, you might want to set a pending order for the long. On the fundamental level itself, the economic condition of Japan is definitely slightly weaker than the New Zealand, and because of the sell-off for the Kiwi for the past 2 weeks. Yep, the past 2 weeks, price might go for a certain adjustment back to a higher price. Alright. Next we have the New Zealand against the dollar. Just to quickly run through, price has reached a bottom, a previous low back in 2013 in July. And right now we can see the price is rebounding, and of course when we compare the Kiwi to the US dollar, we are looking for price to depreciate further. So in this case we might want to take a look at the forward charts. We might want to look for a trend line as a gauge. Alright, this is about it. The price, we can actually try to wait for the price to retrace a little bit further because before we go in for a short opportunity. And the first level that we might want to look at is this level, the previous support level and the previous resistance. I think this is a very good level. It might even form a range based on the past structure itself. So the very first level we're going to look at is 0.8078. So from there we might want to decide whether to go for a short again. Just since that was also the falling trend line that I just plotted in the forward chart itself. Okay, so yep, let's wait for price to reach 0.8078. Lastly, I would like to look at the pound against the Aussie. Alright, this is the weekly chart. We can see that price has broken above the 200 moving averages, came down again, touches the 200 moving averages again, and start to rebound. So as we know that the Bank of England is looking at when to raise interest rates, so rightfully on a fundamental level we should be seeing pound to appreciate against the Australian dollar, whereby the Australia itself, or rather the Reserve Bank of Australia, is actually having a problem with a historical high level of this currency level. Alright, so the thing is that we might want to look for a long opportunity for this pair. So what we can see here right now is that it is making a retracement, so we can plot a Fibonacci retracement over here. Alright, these are forward charts, and look for which are the support level. So we can see maybe this level over here, maybe at a price of 1.795. Alright, so that's the Fibonacci retracement level of 50%, or maybe you can look at 30.2%, or even the very first level at the 23.6% at the price of 1.8340, which is the previous resistance level over here, as you can see. So this is the first level, followed by a 30.2% at 1.8125. Or if not, you might even fall all the way to the 61.8%, which acted as a support level previously over here. But there's a few levels that we can actually look at, but we will just wait for price to reach the first level and we'll see if there's a setup for the long opportunity. Alright, you might want to take the stochastic as a additional support for a long. Alright, so that's all for today. So thank you for watching. I'll see you again. Bye.